Okay guys, on today's discussion we're going to be talking about IPDA in line with premium versus discount. Okay, so we're gonna see how we can blend together the two. Okay, so basically this is what we have here. So you can see we have the 60 days. Okay, so we just count back 60 days. So you can see here this is daily time frame. Okay, so it simply means one candle is equals to 1 day. Okay, so basically the easiest way to do it is to count from a daily time frame. Okay, so because one candle simply represent 1 day. Okay, so if you're gonna be having 60 candles, that's 60 days. Okay, so 40 candles, that's 40 days. Okay, 20 candles, that's 20 days. Okay, so you look back a certain number of days according to IPDA. Okay, and then those days is 20, 60, 40. Okay, so if you are doing short-term trading, I mean day trading specifically, you can just look back 20 days. That will be enough. Okay, but if you are doing like swing trading and position trading, you can look back 40 days and 60 days. Okay, so this is what we have here. So we're gonna blend this with premium versus discount. Okay, so based on premium versus discount, what we are doing, okay, within that range that you have selected. Okay, so we're gonna work within this range of 20 days. Okay, so this is the range that we're gonna work within. Okay, so you can see here we're gonna pick the highest high of that range. Okay, so this is the highest high of the 20 days range, okay, that we have picked, and this is the lowest low. Okay, so we can take our fib here from here to here. Okay, so you can see here what we want is just our equilibrium. Okay, so you can see here we have our equilibrium here. Okay, and anything above our equilibrium we refer to it as premium. Okay, and anything below our equilibrium we refer to it as discount. Okay, so whenever we refer to equilibrium, we refer to 50% of this range here. 50% of this range, it's our equilibrium, or it's the midpoint of this range here. So basically what we want to see, or the idea behind marking your range, okay, so this is what we do here. So let's just mark this range here. So this is what we have here. So above our equilibrium or at premium level, price doesn't need to stay that much. Okay, of which is what price did. Okay, so above 50%, we can see price didn't stay that much. Okay, so it just spiked this level here, started spiking and spiking, and we can see that it's indicating that it's losing momentum to continue to go up. Okay, and finally we get to see this candle setting up this stage for that idea. Okay, that price is most likely to just lose momentum. As you can see here, it's busy spiking this level, failing to continue to go up. At least take out this high here, but it failed. So you can see that this is happening at above our equilibrium point. Okay, so that's the theory. It's simply basic supply and demand. Okay, whenever something is at an expensive price, or whenever something is expensive, let me just put it in that way. Whenever something is expensive, we get to see the demand decline. Okay, and whenever something is at a discount level, we get to see the demand increase, which will then eventually cause price to shoot up. Okay, and then if the demand decreases because something is expensive, it's gonna cause price to go down. Okay, so same applies here. Whenever price is at the premium level, we don't expect it to stay that much. Okay, so this means you're gonna be looking for any institutional reference point here at your premium level, okay, to sell short. And then also at the same time here, you're gonna be looking for any institutional reference point to do what? To buy. Okay, because it's at a discount level. You don't expect it to stay that much, okay? But you need to keep in mind that there is what we call shift in market structure, okay? So in as much as you're going to be looking at a premium versus discount, and you are expecting to sell at the premium level and to buy at the discount level, you need to keep in mind your order flow. What is the shift in market structure at that time? Okay, so you can see here we have a shift in market structure here, indicating that we are bearish. Okay, so it will make sense for us here, since we have already identified our discount versus premium, okay, to actually take any sell trade here or sell position here, because we have already established here that our shift in market structure it's bearish. Okay, so let me just shift and go to 4-hour time frame. So we go to 4-hour time frame. So this basically what you will do after you have marked. You can go to a smaller time frame. So you can see here we have this order block here. This is an order block, and then we also have this balance price range. Okay, balance price range, we are referring to an order block that was, a fair value gap that was previously violated. Okay, so this fair value gap that was previously violated, it's called the balance price range. Okay, and we also have these here, our order block here, lining up at this level here. So we have a lot of confluence at this level here. Okay, and when price gets to this level here of our premium, you can see we get to have a decline in price, and price is continuing to go down, as you can see, because you can see here above premium, price didn't stay that much. Okay, so now we are back to our daily time frame. Okay, so the same thing is true. Okay, so if you're gonna be looking at the 40 days, so 40 days look back, okay, you're gonna identify your highest high. This is your highest high, and this is your lowest low. So we already have the fib here, so you can just move your fib here. The lowest low is still the same. Then this is the, this is the highest high, okay, for the 40 days range. Okay, so you can see here this is a 50% here. So if you look back 40 days, okay, within the 40 days range, you can see here that our price is still below. Okay, it's still below equilibrium, so price is on discount. Okay, so the same you can see here. If you look back the 60 days range, you can just use this high here. This is the highest high within this range here of 60 days. Okay, and this is the lowest low. Nothing has changed. Okay, so basically you can see we are still on discount. Okay, depending on which range you're gonna be looking at. Okay, so you can see here we are still on discount. So basically that's how you get to blend the premium versus discount with IPDA